All right, let's go over, a little bit on my underwriting spreadsheet, and this is what I use on every single deal and how I go about, really doing a deep dive analysis. So when I first open this up, it's really just this section right here that's going to be there. After I go in and fill out everything, this is an actual property that I bought, and so this is a real deal kind of numbers here, but. So here's the property name, address. I just fill this information, and this is for me when I'm kind of coming in and doing the deep dive. I've already done some back of the napkin, gotten an idea of whether or not this is a good deal on paper, on that back of the napkin. But when you really want to come in and fully underwrite it, you got to do all these other things. And so I'll go in, I'll add in the population numbers. I'll look at, number of households, population, median household incomes is what I'm looking at here. So 75,000 within 3 miles, that's a good number. Home values, total square foot per capita. These are all numbers that I'm looking at, and a lot of that I'll get right here from, this is a screenshot that I take just from Radius Plus, which is going to show you kind of the MSA. This is Bartlesville, Oklahoma, just north of Tulsa. How many facilities are, total square foot per capita in that MSA, or is there anything in development, total population, and so that's just some overall numbers. Some other things I like to add, my links here to my tax rolls, so that way I can quickly get there if I need them. Here's my link to the vehicle traffic. So this is taken from the road out in front of where the facility is, and so I can see, going back into time, and then going to now, or the latest that they've got data on, what the vehicles per day traffic was. And so some other notes to myself, just down here. So that's it, really. But you're going to start with this, and this is kind of my overall. Then next thing I do, I'm going to come over here, and I've taken the, here's building 1, building 2. So this is all the data I got from the seller. She's given me however many units per building, what rate I've got per unit size, and then I can validate that there was a total of 29,700 square feet on this property. So I have got, there's no climate control here. I've got this split up, but this is a roll up of all the 5x10s. Your average rate here is, I've taken the average rate across her actual rent roll. So I'm getting actual numbers here of what she's bringing in versus, what's rented. So you can see here that she's got unit occupancy of 89%, 211 out of 238 total units are rented. And so this is really just a baseline to see where you're at currently. And then I've added a section over here, just really like if I'm going to raise these rents from, an average, if I raise all these tenants, from $34 and they're going to go to the street rate now of $50, $49 for a 10x10, taking them up to 70. So I'm trying to get an idea of how much new projected revenue there could be, and then what the new price per foot would be. So 61 cents versus 43 cents currently. And then how much of an increase is that? That's a 41% increase. So you'll see where that comes into here in just a minute. So on the ramp up, it's really, right now she's at 89% occupancy. If I'm going to have an occupancy goal of 97%, I expect, if I can get, just doing better operations and management, can I get 2 move-ins per month? So what that does is it throws that in here, and it shows me I'll get to 97% by, about month 10, and then it's doing some projections here on the income. But really, this is just, I just come in here and I fill this out, on my move-ins goal per month. And so next here, you're going to go through and do a full competitive analysis. And so I've got every single competitor within, probably 5 miles. I go in here, you list the name, you do an estimate. You can watch one of my other videos on figuring out about how big these facilities are through Google Maps. And then you call them, or you look on their websites and you try and find out, what kind of rates they're charging by each kind of unit. And so really we're comparing non-climate control. I didn't really come up with anything. I don't really need to look at what climate control rates are, but fill in all the climate control rates, non-climate control, and then also I'm making notes on every single one of these, completely full, no website or ability to rent online, new sign out front, kind of fenced, there's a gate and keypad. So that way I can continually come back here and look at this, as well as when I'm doing my business plan for the bank, I can include a lot of these notes. And so what I'm really looking at here is average competitor, on a 10 by 10 is $70 versus what she's charging right now is $49. And so what the difference is in that average rate. And so that's a 41% increase is what can potentially be done. And so going across each and every single unit, where does she stand currently? Where does the current, operator stand versus the competition? And so this is another screenshot from Radius Plus, and it kind of just shows by another way. This is me calling up here and looking at their websites, and then this is me looking at the competitive analysis inside of Radius Plus. I can kind of get a feel for, a 10 by 10 ranged from $50 to $105, and the average here is $80. So it's even coming in higher than what I've shown, and so there could be more room to even raise the rates here. That's really all I do is fill that out up to that point. And then I'm going to come over here to my income and expense projections. And so, when you first open this up, none of this stuff I add certain things, when I'm looking at how much am I going to improve? I put in a new signs here. I've got new gates, or a new gate, plus an operator, adding some gravel. So this is all, things that you're going to want to include. How much are you going to actually add to the property in terms of CapEx when you buy it? And so what I really focus on when I fill this out here is, this is current year. You're going to fill in everything that the current owner is actually doing. How much is she spending on insurance, taxes, all her expenses, postage. I had one guy that I bought a property from. He still did things really old school, and he mailed out letters every single month. His postage was insane. It was like hundreds and hundreds of dollars a year, because he was, printing everything out and mailing stuff, as opposed to doing it automated through email like I do. So you adjust that accordingly. But what you're going to do is come in here. You're going to project. I took it conservative. So I did a rent price increase over year one of only 25%. You saw prior that I could actually probably go up to 35, 40% rate increase. And what that's going to do is, let's say this is 35%, it's going to increase your gross potential revenue for that year. And so I'm saying let's just raise rates 25% across the board. Then you come to an occupancy number here. Do you think that's going to change anything? If let's say you lose a few people, and instead of being a better operator and increasing the occupancy, let's say in year one you lose some occupancy, which is highly likely, and then eventually you're trying to come back up to normal numbers. And so you're going to project these out. You're going to put in here, okay, after year one, my big rate increase, I'm going to start raising rates at just 6% a year, and then I'm going to be operating this so well that I'm going to increase occupancy up to 90%, and that's considered stabilized for me. So you can change around all these percentages over here to affect the rest of these numbers. And so what you want to do, you're going to have to go out and get an insurance quote. You're going to have to figure out what your taxes might go to. This lady's only paying $4,000 a year in taxes. I talked to the county tax assessor, and I got an idea of how much they think the taxes will go to on this based on my purchase price. And so, you're going to have to come up with these estimates. So I estimate these as much as possible to come up with a real number on expenses. And so, she's got a 15% expense ratio. That's just not realistic, especially if you're running these things remotely. You got to have all these other expenses in there. And so I've got a 39% expense ratio. That could be reduced, but you'd rather be safe than sorry. And so with that being said, and let's see, I think I had this in here before, 89%. And so let's say nobody really leaves. They know they've been paying under market rates. You're going to raise them up 25%, but they're going to stay. What that ends up being is that in year one, her income is around 11,000 a month. I'm bumping this to north of 14,000 a month, and so the top end increases significantly. But then we've got a whole lot more expenses. So actually, our net operating income is going to go down a little bit. But eventually, here in 3, 4, 5 years, it should be substantial, and you'll see over here in just a second. I've got a couple different scenarios here, and so what I do here is I play around with, I've got my purchase price, bought this for $1 million. I'm going to put 25,000 into it. I'm going to hold back $10,000 in the operating accounts. That way, that's kind of your rainy day fund or working capital that you need to kind of run the business. So I charge an acquisition fee of 15 grand to this deal. And so once you talk to your bank, you can put this in here. Are you getting, a 25% down, which this is, 20% down, 35% down? You've got to come up with these numbers and put them in here. The interest rates right now are pretty horrible. When I first started talking to this bank, I was at 7.1%. But the Fed continues to raise rates, and so my interest rate has crept up. And so you can see here what I focus on after inputting all these numbers. I got my rate and term. I've got investor contributions. I'm going to need, you can see here, financing shortfall, 315 grand. So I know that I need to raise $315,000 to close on this property. And so what I'll do is I'll go out and this is a $290,000 raise, and whatever's left over is what I will contribute. I'll also play around with the equity percentages that I'm offering folks. And what I do is I'm looking down here at their average annual returns in year 3, 4, and 5. Okay, so if I'm north of 18%, that's a pretty good deal. And so right here, this is going to dip. If this does stay at 8%, let's just say the debt coverage ratio is still good, but this takes their IRR down slightly, but it's still above 18%. So I'm still thinking this is still pretty good. And so plug in most of these things that are in orange, and then you can come up with a cap rate. I mean, back just a couple years ago, this property might have sold at a 6 or a 5.5 even, which you can see in year 3. At the end of year 3, this is worth $2.26 million. So that's over $1 million profit, $1.25 million profit on the $1 million purchase price that we had. So being conservative here, let's just say it's a 7 cap. So, I mean, I think going in right now, I really feel like, this property when it was purchased was, bought it for $1 million. I think turning around day one could be worth, 1.5, 1.6. But our conservative estimates here is what I'm thinking. These are showing, it's going to be 1.6, 1.7 in year 3. And so what all this does, at the end of the day, you're going to look here and see your bank's going to underwrite this. They're on their own, but you can see about what the debt service coverage ratio is. So if you read that part in the chapter, 1.2 or higher is what you're shooting for. And so this is 1.55, so we're in good shape. The bank might have some stress testing that they do on it, and they could stress this even further and say, okay, what if this guy goes to 80% and he's at now, there's an 8%, he's still at 1.3. Okay, we're still good to go. These could be higher, these could be lower, but you're trying to come up with your best estimate. So really that's it at the end of the day on the underwriting model. And then over here, like if you want to compare and contrast this scenario, you could copy and paste this multiple times over. But 70, you could say, let's see, the seller carried back 10%. You could plug that in, and that will reduce your cash to close. And you just play around with these different scenarios, and that's how you come up with your numbers here at the end and figure out Is this a deal or is this not a deal? So that's pretty much it. Yeah, leave a comment below or reach out to me if you got any questions on this. Thanks.